What's happening, traders, and welcome back to Shift the FX. What we're going to discuss today is an outlook and recap on how we manage to use a mechanical system every single day in how we execute our trades. Now, you've seen the way I've done one of Outlook that I'll be bringing out each week, and you've seen in a couple of the recaps that we use the same monotonous approach week in and week out. If you look to the right here, you'll see daily candlesticks, and to the right of that, we have our weekly. Why do we use these two? Essentially, what we're looking at is a two-candle theory. We are looking for a bearish close, anticipating that the next week will close bearish, making that low our lowest hanging fruit draw on liquidity. Understanding that Monday, Tuesday, Wednesday, Thursday, any day of the week can produce the high of the week there and inevitably target that low. 90% of the time. Okay, if you have a look here, bearish candle close, target the low. Bearish candle close, target the low. Bearish candle close, you get an inside bar. Inside bar, we don't trade. Bullish candle close, what are we looking at targeting? The high. Bearish candle close, we're looking at targeting the low. Understanding that market is bearish, overall bearish, tapping into an order block, gives a good reaction candle. We can now go from internal range liquidity, being order blocks and fair value gaps, to external range liquidity, swing lows and swing highs. It's not rocket science, guys. We are literally just looking for candles to close bearish, open up, create the wick, giving us the power of 3, and targeting and moving down further. With that being said, what we've isolated in the charts is that we had a tap into this order block with a strong reaction candle giving a bearish close. Candle, previous week's candle, has the same thing. We have set the Monday high, potentially Monday high. But understanding that at this point, we are most likely going to step into the market and try and continue on our bearish run. How do we address the markets every single morning? Same process you see me draw every single video. This is going to be so repetitive for you guys that you are going to get the same information over and over and over until you grasp it. Asian range standard deviations. What are we trying to look for? Within those two standard deviations, what is the most obvious draw on liquidity? That's all of your buy side liquidity. So within these two regions, we are trying to determine where our most obvious swings are. From here, we are mapping out our midnight open. And above the midnight open is our efficient trading zone. The most efficient entry zone in the power of 3. We're waiting for the market to trade up, take liquidity, as we've seen here in the Asian range, sweep a liquidity, and give us our entry pattern. Now, in previous videos, I've told you guys what we look for in our entries. Nothing complicated. We see a candle close, giving us a good indication that market has rejected. And that the second candle is our engulfing candle. That's all. We are trying to use a system and approach where we can keep it as simple as possible. Our dynamite candle and our engulfing as the detonation or explosion. That's it. What do we see market do over here? Market trades up, gets swept, that high gets swept, close. The fuse has been lit. We now need to see the next candle engulf this candle. Not the entire wick, we just want to see a close below the body, but something substantial. And in saying that, we managed to get our explosive candle right there. At that point, it's instant execution in the market. Initial point, the session low. Okay. Get your break-even level, take some partials off at that point, but understanding that from the right hand side here, using the 2 candle theory, we are targeting our swing low. And that's exactly what we've seen happen today. Market rolls out all the way to the weekly draw of liquidity. Capitalizing on 11.3% on this trade. All right, guys. So I want you to try and isolate this. I want you to back test it. I want you to go through the process of using the 2 candle theory. Yes, there's all sorts out there with CRT candles, next day candle, whatever it may be. There's different terminology for certain scenarios. What I want you to try and look for is just understanding that what the previous day did and how it closed will dictate what you do today and not anticipate. Now, while we didn't trade on EU, simple process. If you have a look at the charts over here, we have an inside bar. Inside bar, I'm a bit more reluctant to trade them. I'll trade the sweep of the high or low of inside bars. But another great confluence in the market is that you had SMT with GU. SMT right there. GU had swept the high and closed within that body. Now we can anticipate the next candle to close to the downside. And that's exactly what we've seen today. All right, traders, I hope that helps. If you guys want any more content or you need me to look into some things for you, like I keep on saying, just drop it in the comments and I will do a video on it for you. I have received a comment this week discussing an in-depth look as to how we capitalize on daily candles and picking our bias, and I'll draw that up for you guys and release it shortly. All right, traders, have a good one and we'll catch you soon.